Hello everyone, this is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, September 22nd, 2025. So in terms of economic news that was released last week, you probably know over the last 2 months we've had some pretty mixed data points, particularly on labor. However, the data points we had last week were all pretty decent. We had a couple of housing-related metrics. I dismiss those. They're a little underwhelming, but it's not really driving the economy or investors' decisions. So some of the things that are, last Tuesday we had retail sales and retail sales ex auto. The expectation for retail sales was a positive 0.2% month over month, came in much stronger, 0.6%. And then when you strip out autos, the expectation had been 0.4% month over month. It came in at 0.7. So what we keep seeing, I did mention the fact that labor market numbers have definitely been disappointing, but the U.S. consumer rarely seems to disappoint. So no matter what's going on, consumer spend and investors and economists seem to underestimate that strength. So the data points we got last week, be clear, retail sales ex auto, much better than expected. So on Wednesday was the big event of the week. It was a Fed rate decision. Now everyone knew the 98% probability built in that they would cut 25 basis points. They did. So exactly 25, not 50. There was some hope starting to build there. Didn't happen. So the Fed cut 25 basis points down to a range of 4 to 4.25. And they also mentioned there's a strong likelihood we'll get 2 more this year. So investors liked what they heard on Wednesday during the press conference. Lastly, I'll just mention initial jobless claims. Prior week came in at 240, and that was a disappointment, upside, disappointing, negative surprise. Went the other way this time. Last week, the initial jobless claims came in at 231,000. Expectation was elevated for 240,000. So again, I'll just mention that as I started this brief podcast that we've had some very mixed economic data over the last several months. Despite that, it is very impressive, a little surprising. The Atlanta Federal Reserve and their expectation for third quarter GDP, unwavering. Continue to believe GDP in the third quarter, U.S. grew 3.3%. Now the quarter doesn't end until next week. Nonetheless, we're pretty close to the end, so this number should be fairly decent. We'll see how good their estimating skills are over the last couple of years. The Atlanta Federal Reserve has been much better than the blue chip economists consensus, which is always shown on the same chart here as the Federal Reserve's estimate. So Federal Reserve still thinks over 3% GDP growth for third quarter 2025. Inflation expectations, nothing to talk about here, been very, very narrow range. It's 2.39% now is the built-in expectation for inflation over the next 10 years on average. Fed funds. So now for the October meeting, 92% probability of the one cut, which is up from 74% the week before. At the end of the year, since we did get the one rate cut, there's no probability, no expectation of 3 cuts. But as the Fed had mentioned the fact that we may get 2 cuts, the odds of that shot up dramatically. So now, at the end of the year, odds of 2 cuts from right here, 99%. Investors very much in lockstep, expecting the Fed to follow through with those 2 rate cuts. Okay, so that was economic activity that was reported last week. So how did the U.S. equity markets in total and U.S. fixed income do? Another good week for the S&P 500. S&P 500 last week up 1.25%. Year-to-date now up 14.4%. That's pretty amazing if you think back to how strong returns were in 2023 and 2024. Nearly 3 years in a row of really outstanding performance. So last week again, S&P 500 up 1.25%, clearly driven by the Mag 7. Apple, I know, had a good week, but in total, Mag 7 drove that outperformance. NASDAQ last week up 2.21%. So if we take a look on the year-to-date basis, we've got the S&P 500 again up 14.4%. Year-to-date basis, growth has led value up almost 16% for growth, 11.4% for value. In terms of large versus small, large is dominated, up 16%. Small cap up 9.5%. In terms of international markets, developed markets last week, ex-US, flat for the week pretty much, up 11 basis points. Still a significant lead over the US. That's been shrinking the last few weeks. But that year-to-date return for developed markets ex-US up 22.2%. Again, the S&P 500 up 14.4%. And then emerging markets did have a decent week last week, up 1.15%. And now for the full year basis, year-to-date basis, emerging markets up 24.7%. Fixed income last week took a rest. We had been a torrid rally in terms of treasuries, 10-year dipping down right to the 4% level. So it has been great. But last week gave a little bit back. The 2-year treasury yield up 2 basis points, the 10-year up 6 basis points. That led to a drop in the Bloomberg U.S. Aggregate Bond Index of 0.19%, negative 1.9%. But I will again remind you, fantastic year-to-date, positive 6.2%. Now, let's take a look at economic activity that will be reported this week. Again, most of the real activity happens at the end of the week. So tomorrow, or I should say Wednesday, we have new home sales. Again, not even hardly worth putting on here anymore. On Thursday, though, a couple of metrics that will be important. Jobless claims, of course. It had spiked to 241. Now the consensus for this week, for last week's number, reported this week, is 235,000. It came in at 231 last week. Also on Thursday, we have durable goods ex-transportation. So the durable goods number, the headline number is expected to improve quite a bit. So for the month of July, that was down 2.8% month over month. That's expected to be down a little bit, but not nearly as bad. It's expected to be down 0.5%. Durable goods ex-transportation, actually in the month of July, that was positive. It's up 1.1%, but for August, it's expected to be close to flat, negative 0.2%. Now, Friday, again, this will be fireworks. I'm not sure which direction this is going to take the market, but we have inflation data, and it's the super important inflation data that the Fed really focuses on, PCE and core PCE numbers. We also get personal income, personal spending, and the Michigan Consumer Sentiment Final, which doesn't really matter. We saw the preliminary. It's not going to move much. And it was negative, quite negative month over month in September. We'll leave that one out. Let's talk about the other ones. In terms of price activity, what's happened with inflation? So core PCE, which is going to be reported for the August period, month over month, is expected to be up 0.2%. Month of July, that was up 0.3%. The headline number, it's reverse. So in the month of July, that was up 0.2%. The headline number is expected to be a positive 0.3%. Personal income is expected to be down just 10 basis points from what we saw in July. July was a positive 0.4% month over month. For August, it's expected to be a positive 0.3% month over month. And lastly, personal spending. Again, the U.S. consumer just does not seem to disappoint. Personal spending for the month of August, just as it was in July, is expected to be up 0.5 basis point, 0.5% month over month. So that's it for our weekly economic update. We thank you very much for your attendance. We'll look forward to seeing you next week. Thank you.